Unity Software recently reported earnings, and unfortunately, investors were not happy as Unity's stock price took a nice hit. For those that follow Unity, we know that this company has gone through a lot in the past year. Today, I want to take a closer look at what management had to say about the future of this company, and is this a buying opportunity? Let's get started with today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
So we can see right now Unity's sitting at roughly $31. The stock is down roughly 6.3% and sitting at a market cap of $11.7 billion. While this is not necessarily a bullish case, one of the things that does excite me at this current market cap is I do believe that any big tech player, if regulators did allow, would go out there and write a nice check for Unity at this valuation. So for me, that kind of creates some form of safety net. Again, maybe other investors might disagree with me, but I do believe the core product that Unity has in the overall gaming industry is worth at least $10 billion. So like I mentioned, that kind of creates a nice safety net. Unfortunately, though, the company has gone through many changes, CEOs, negative impact from policy fees, and overall a complete restructuring in the business that we do see Wall Street is not very excited for the next 12 months of this overall company. After Unity reported earnings, we did see a nice influx of price target reductions of various analysts, right? We can see this one from $40 down to 31, from 35 down to 32, from 37 down to $30, from 32 down to 29. So overall, based on where we're at right now, Unity stock, from what analysts believe, is going to be pretty much dead money for the next year. But I do believe this is something that investors need to consider when looking at analyst price targets. This is mostly something within the next 12 months, and as investors, we are looking at that long-term mentality plus 12 months or more. All right, so like I mentioned, Unity is going through a lot of changes, pretty much a two-phase plan. Before we go any further, I just want to say thank you all for the amazing support we are getting in this channel. We're closing into 40,000 subs. That is insane. So if you haven't and you are enjoying the content, make sure to hit the thumbs up and the subscribe button. Finally, if you want to support this channel a little bit more, check out my special offer at fool.com/Jose. Now back to today's episode. So phase one of this overall business was pretty much restructuring the business. And by they mean restructuring, they meant that, hey, look, we're only going to focus on our core business and we're going to trim all the fat. This is what we heard in the last quarter. So they did reset their overall portfolio and closed out of a lot of businesses. Unfortunately, these businesses were, while they did generate revenue, it generated roughly 283 million in revenue in 2023. They did operate at a significant adjusted EBITDA loss. Going forward, obviously, they believe these segments are going to be non-material, so they're only going to focus on their strategic portfolio. Outside of leaving certain businesses, unfortunately, they had to also reduce their workforce by roughly 25%. Now, the reduction of workforce and the reduction of unprofitable and unsustainable business means that they're going to get a nice amount of margin improvements, or they're also going to trim the fat in losses. For example, they're going to have cost savings in cloud hosting, in office footprint, in software license optimization. They're also going to have some other forms of cost savings in forms of stock-based compensation and cost of goods sold on those business segments that were highly unprofitable. Now, management does believe that the first phase will be done by the first quarter of this year, so within the upcoming months. Then after that, we are going to go into phase number two, which is Reignite Growth. In forms of Reignite Growth, the company is expected to release a new generation of their Unity platform, Unity 6, and they continue to scale up their generative AI offering. And right now they are seeing a lot of kind of great feedback from both their consumers in the gaming market, but also their consumers in real-time 3D capabilities for the industry market. The company does mention that they are going to give us more information towards the end of this year. So again, this is why I do believe most investors are a little bit worried about Unity. Hey, you just finished this cutting off the fat. You're saying you're reigniting growth, but we're not going to hear too much or see too much of this until later this year. So this is why I'm pretty sure we did see a nice amount of analysts reduce their price targets for the next 12 months. Now, the company did give us guidance for the first quarter and for the full year. And I This is probably what's scaring a lot of investors as well. If you take a closer look at these numbers based on last year's numbers, you're going to expect a nice amount of revenue decline. But the company, again, has trimmed a lot and a lot of products. So they kind of gave us more of an adjusted basis of how previous quarters might have been. So for quarter one of 2024, they do expect revenue to be somewhere between 415 to 420 million. Now, if you compare that to quarter one, based on this strategic portfolio, it's pretty much flat year over year. Forms in revenue for full year of 2024 versus full year of 2023, it expects maybe a small single digit growth. Again, this is supposed to be a heavy growth company, but they do expect to exit 2024 with adjusted EBITDA margins over 25%. So we can see with overall similar revenue in fiscal year of 2023 and fiscal year of 2024, the company estimates adjusted EBITDA to be up almost 75 to 85%. So we can see this is definitely the help of the company cutting off some fat. Now, while we are seeing this, the company hasn't really showcased us too much where the growth is coming from. Now, on the bright side, the company is making some great choices by focusing on their core products. We can see core subscription, excluding China, grew 18% year over year. So this overall showcases that, hey, look, Unity's main engine is a great value, and even with all these hiccups, the company was still able to grow in this market. For those that don't follow the gaming market, one thing we are seeing is the gaming market is a little bit weak right now. We're seeing kind of workforce reduction all over the place, from big game creators to small game creators. And at the same time, while that is happening, the company, excluding China, is still seeing a nice growth in their core subscription business. Now, unfortunately, on their growth solution, which is pretty much their advertisement business, that is right now being impacted by competitiveness in the market. This is something that investors are also worried about. We've kind of seen some great results from a lot of big advertisement players, but we see that Unity is kind of lagging in this space, a space that they were supposed to kind of see a nice growth right in. Now, luckily, during the current earnings call, there was a question to kind of address this competitive environment, and the CFO of Unity mentioned that right now they know where their gaps are. They have aggressive plans to close those in very short period of times. So they're working towards that, and they do refer that they're going to continue to grow in this space as they invest aggressively. So Unity, like I mentioned, while they are trimming the fat in parts that don't work, they're going to continue to focus on the segments that work, which are going to be their core products and their overall advertisement and growth solutions for their users. Like I mentioned at the beginning of this video, somewhere throughout this video, that Unity probably will be dead money for the next 12 months or so. But again, I am very bullish in this company as I do own it. If the current CEO stays as the CEO, he has previous experience in the overall SaaS market. He did really good in the Red Hat business that got acquired by IBM. If he stays in this, I do believe Unity is in great hands and can continue to succeed. If we do see another CEO, this is probably going to be the biggest red flag for me. And we would have to see where the new CEO is trying to make things. But right now, I am really liking this interim CEO. I really like how he cut down the fat. He removed a lot of positions very quickly, and now they are focusing and investing in growth opportunities. So Unity probably dead money for the next 6 months, but if we start to see that reacceleration in growth, I do believe Unity could be a very good player for long-term investors. So let me know your thoughts. Are you bullish or bearish in Unity?